we're in the midst of an absolutely unprecedented tech stock bubble. And a lot of the AI companies, along with Elon Musk's SpaceX, are trying to go public right now. Okay, this is a longer story. I'll condense it. But, they're desperate for capital because they all want to exit their positions. The AI investors and a lot of the Tesla and SpaceX investors, they'd like to get out with a profit because everything is so highly valued. They're not clear on how to do it, so they're trying IPOs, but now they're releasing prospectuses for the IPOs. And it's turning out that those things, they're not profitable at all. Like SpaceX, it has a thriving rocket launch sector or division, but it's not profitable. They're losing money still. And then they've got an AI division, which is losing a lot of money and has no real prospect for turning profitable. And the only thing that's profitable is Starlink, which is a network of space-based satellites that are giving the world internet, which is a great business, making a lot of money. But that is dwarfed by the valuation of SpaceX stock in the coming IPO. Same thing with all the AI companies. They're not worth anything like, when you look at their cash flow, which is non-existent, they're not worth anything like what their market valuation says they're worth. And now, in order to get these IPOs done and to get these stocks trading, the U.S. government is changing the rules that apply to newly public companies in ways that make it a lot easier to go public and a lot easier to get listed in indexes like the NASDAQ 100, which then requires ETFs to buy those stocks. So they're pulling what looks like a scam here, where they're basically trying to get out of their positions using the liquidity that's in 401ks and to an extent IRAs now. So this frankly looks like a scam, and we'll have to see where it goes. But, based on what tech stocks are doing right now, it could be that a lot of people are picking up on the fact that the scam is being run and they don't want any part of it. And that's part of the reason for the aggressive selling in the NASDAQ right now.
What you're describing, this milking of the baby boomers, it's been pointed out by Andy Schectman and others for the past half a decade at least, that the amount of indebtedness of the United States is, at least the on-balance sheet liabilities, is remarkably similar to the size of the 401k nest egg that hardworking moms and pops, the salt of the earth from all across the country, have set aside for the past 4 or 5 decades in their retirement plans. And it's based on the little man rule, which is that these big high-flying executives and others generally position themselves well ahead of and then expect someone else to be holding the bag when they want to get out of the casino. Tell us more about your view of how this has all been set up, just from watching the numbers, and what examples you have of where it's been demonstrated that moms and pops are left holding the bag at the end of these obscene run-ups in price.
Well, the way you describe this, Donegan, it sounds like a variant of the Great Taking, right? Where at some point, they're going to basically steal all of our financial assets and then transfer the wealth that's created that way into the accounts of the government and the handful of billionaires out there that are orchestrating this. So, I'm not sure I would go that far, but it does look like they're using the passive investment infrastructure. In other words, there's a lot of ETFs in the 401ks of baby boomers that are, by definition, buyers of whatever's in the S&P 500 or whatever's in the NASDAQ 100 or whatever. And so what they're trying to do is move these big tech stocks that basically are the only thing underpinning the U.S. stock market and by implication the global economy right now. They're turning out to be not nearly as profitable as they should have been by now if they were actually legit companies. So what the people in charge seem to be trying to do is to move the obligations of these big tech stocks into the accounts of baby boomers' 401ks. And in that way, they allow these companies to continue. And, in one sense, it's kind of a government bailout, right? These companies are already too big to fail. And what they're doing is looking for ways to bail them out. And this is kind of a behind the scenes way. People don't really understand what's happening. They just know that SpaceX is going public. It's going to be worth $1.5 trillion, and it's immediately going to be in your 401k account. And the same thing with OpenAI and Anthropic and whatever else in the AI space that intends to go public now. So people might not understand that that's what's happening, that all of a sudden they're the bag holders now for these big tech stocks that can't be allowed to fail. So we'll see. If people pick up on it, and there are indications that some people are with the way the NASDAQ is behaving, then that might cause some serious turmoil going forward. So we'll have to see. But, there's a lot of sentiment now turning against AI in general. People are refusing to allow AI data centers be placed near them. And, they're not that interested in buying these stocks. Otherwise, it would be a lot easier for these guys to go public. They wouldn't have to run a con in order to go public. They would just sell stock to a really enthusiastic group of public investors, because we're looking at their prospectus and seeing, great growth and positive cash flow. Well, they don't have any of that to show us. So they're kind of doing a backdoor wealth transfer now. And who knows? Who knows where it ends up? But right now, it looks pretty ominous.